Today is Wednesday, October 11th, 2023. This is a chart of NQ, 5-minute chart. Today I placed two trades on NQ. One was a loser and one was a winner. So I went short here, stopped out here, went short again, and covered here. The reason that I was short biased today on both NQ and ES because on the daily, so this is a daily chart of NQ, I noticed that during RTH, the regular trading hours, today's candle, so the second candle of the day, it took out the stops that were above this candle. This is yesterday's candle. And then on ES, I saw that it tested about 75% of this tail, so above 50% of this tail. And so this would be resistance. And it's also trading into this fair value gap on the daily chart. So I was short biased and I was waiting for the right entry. And the right entry for me is, well, I missed. So before I go into the 1 minute chart, I want to point out the divergence that I noticed on NQ and ES. So NQ put in a higher high in relation to candle 1 and candle 2, where ES put in a exact double top. So there was a divergence. The second candle on ES failed to make a higher high in relation to candle 1. So that was a divergence because usually NQ and ES they usually mirror one another, but the fact that they didn't was a red flag that there was something amiss. And then when I saw the third candle of the day, this big bear candle, I wanted to get short, but I wanted consecutive bear candles on the 5-minute chart to get short. So I didn't like this candle, the fourth candle on ES. It did put in two consecutive bear candles, but there were tails, bottoming tails and topping tails. So I didn't like the fact that this candle didn't close on a slow. So I was patiently waiting. Then I decided to get short right here on candle 12, the 12th candle, because I shouldn't have went short here. Yes, my premise that the market would sell off was correct, but if I shouldn't have went short here. I thought that, so this is the 20 exponential moving average. I thought, this is a high 2. This candle 9 went above candle 8. That's a high 1, and candle 11 went above candle 10. So this is a high 2. So I thought bulls would, those who go long because price is at the 20 exponential moving average, I thought they would go long and get trapped. So I went short here, and then it did go in my direction, but then it popped up on me and I stopped out here. I stopped out because this was a strong bull close above this wedge. Wedge is 3 pushes up, so this is the first push, the second push, the third push. When I saw this close above this wedge, I closed out the trade. So I want to go into the 1-minute chart, and I want to highlight something. So this is what I usually focus on whenever I see a bear candle and then a higher high, and the market breaks below that bear candle. I pay attention to what price does within the range of this 1 minute candle. And when so this is where I went short on the 1 minute, and this is where I stopped out. So my stop was actually a lot of points. Well, it was about 35 points. 34 points and 3 ticks. So I stopped out. But then once I stopped out, I realized that this candle tested the range of this bear candle, which is the last bear candle before a higher high. And usually this could act as significant resistance. So this is actually one of my to-go-to signatures that I look at once I'm in a trade, or when I'm looking to take a trade. When I see something like this setting up, I usually hone in on it and I try to see how it's affecting price. So I noticed that this range was acting as resistance here once, twice, 3 times, and this candle, this bull candle, closed above the high of this candle by 1 tick, by one tick. But prior to that, I had went short, and I told myself I would stop out if the market closed strongly above this candle, or if there are consecutive closes above the high of the day. I told myself I would just take the hit and walk away. But sure enough, this candle, it worked as resistance, and market started selling off, and I was able to close out the trade. I closed it out right here, so I got back what I lost plus a additional 20 points or so. So from my second entry short to about there, that was 46 points. Excuse me. So I actually netted about 10 points of profit, but I'm a bit disappointed with my exit because the plan was to take profit at this line right here. This line is yesterday's close. This is close of yesterday, and the plan was to take profit right here, and that would have given me a additional. So from right here to right here, it would have given me additional 25 points, and the plan was to get out there. But then I was watching gold. I am currently, I'm currently swinging gold in one of my long-term accounts, and I saw that gold was just moving higher. So on this candle, is where NQ was going down, and I just saw this strength coming into the market, so I just closed out the trade instead of waiting for my original target, which would have reached. I'm not. Yeah. Today was a small winning day. Just a tiny winning day. Not really happy with the way I traded today. I should have been more patient with my first entry. If I were patient and actually waited for price to retrace to this 1 minute candle, I would have gotten a better entry. But it is what it is. I'm also not happy that I let what I saw in gold, that strength coming into the market, for influencing me to exit the trade way early instead of holding for the final target. So this concludes the trade for today. This concludes the review for today. Today is FOMC day, so I won't be placing any more trades, and the market is going to get very volatile